Let's face it, this is discouraging, but it's a cold, hard fact. Statistically, 90% of the retail investors lose money in the market. Most of us is not directors nor a senior management of a listed stock, so we do not have the insider edge. Nor we are big band traders who have access to the supreme calculation and implementation speed. Neither do we have unlimited money to average out our bad trades. And in fact, this is a wrong logic move, and we'll teach you along the way how you can fix some of your bad trading habits. Anyways, my point is, even Michael Jordan often loses miserably when he is playing in the baseball matches. So as a retail investor, we should play the game smarter and we should stop competing in a field that there is unfair advantage. We should stop pretending we know the result of an economic data release. We should stop betting good figures will come out from the upcoming earnings report. Nor we should trade every news in the first moment that is being released to the media. And instead, we should find somewhere we also has an edge on it. But is there really one aspect that we have an edge on it? And I would say yes. Now let me raise an example. I remember my university professor teaching me that the market is efficient. So efficient market theory says that asset price always price in all available information. So if we have an economic data release to be announced, on the second that the data is released to the media, the forex prices will immediately price in the new information and jump to the new prices. So implication of this efficient market hypothesis is that you cannot use a news that is already circulated in the media and ride on it and continue to profit of it. And seems that as a retail investor, we only got information that we can subscribe with like a Bloomberg, CNN News. On a quick conclusion, it seems that we are still playing on the unfair ground that we'll receive the news a lot later than the institutional traders. But again, is it really the case that it looks like to be? So this time I pick a major news to demonstrate. So out of market expectation, the Bank of Japan announced more easing in 2012 October 30th. And by buying more bonds in the Japan market, it will easily make its currency become more weaker. And here by more weaker, because this is a USD JPY chart, so if it goes weak, it will goes up, meaning that $1 will exchange for more Japanese yen. So it is not hard to know that it is going to be weak after the Bank of Japan has announced this major news. And Soros, the market guru, also spotted this opportunity. He said to the media, quote, "I made $1 billion since November on the yen bet, on February 14th, 2013. So in other words, Soros short-sold the Japanese yen and hold it for 3 months and made his $1 billion. And I want you to see in the perspective that the market is not efficient in this major news, in which the market cannot drop 20% of its own currency value in just 1 second. Think of this. If the market is efficient on this major news and the Japanese yen is allowed to drop 1,000 pips on the next second, this alone will disrupt the whole financial market. Like stock in Japan will immediately appreciate with 10% because the Japanese yen is now lowered with the 10%. In order to have the same value for the corporation, they must appreciate 10% immediately in the next second. And think of how that will disrupt the whole market. And if this allows to happen, then people who short the market and have not did enough hedging will bankrupt in the next second and destroying the money chain, and the cash flow will be stopped somehow and then affect the other corporation as well. And it will create total chaos in the market. So the conclusion is the market does not allow it to move 1,000 pips in 1 second. In history, I think there's only 2 or 3 times happened in the past 30 years. So one of them is being the Soros shorting the British pound and moved the pound down for 1,000 pips in very short period of time. Another one was Euro Swiss dollar move, which almost bankrupt the FXM. And there was also one that in 2008 that there was the failure of carry trade and Australia dollar had dropped like 1,000 pips in a very short period of time back in 2008. But you can see this kind of day move 1,000 pips doesn't happen every day in the everyday market, but it might happen like once in 10 years. So 99.9% of the time, if the market want to move 1,000 points, it needs some time to do it. So Soros take 3 months to earn the US 1 billion. Of course, he wanted to get it much more earlier, but he understands that it is impossible for the market to move 1,000 pips in 1 second, so he waited for 3 months instead. And because of this inefficiency of the market in this major news and the time element, that as a retail investor, we can also take advantage on this to buy and hold and wait for the market to completely price in the major news for the commodity price. And this is also why most of the time we have a trend for the market to unfold and to slowly actualize the ultimate price. So in a summary, as a retail investor, we can also enjoy an edge if we are able to pick a major news and practice the buy and hold strategy and wait for the fully priced in price to come. The key of this strategy is whether or not we are able to pick the major enough news so that the market does take time to grow to its price target. And in later parts of this workshop, I'll be talking about how we could take advantage of this unfolding trend and make good profits from them. And yes, you have a homework. The homework is to recognize the 7 news that I've stated, whether or not they are worth for you to pull the trigger and perform the buy and hold strategy on that particular news.